right. Welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack, CPA, certified tax planner, and founder of BetterBooks Accounting, where it is our goal to eliminate the overwhelm, frustration, the confusion, all of those negative emotions that you, the real estate investor, feel around taxes. And we're doing it through podcasting, through YouTubing, through tax planning, through tax strategy, through building strong relationships with real estate investors to grow their portfolio, keep more money in their accounts, and just give them confidence in all of their investing decisions. So today, we're going to be talking about a topic that is very near and dear to my heart, as we see a lot more people growing in their knowledge of the tax code, especially in the real estate industry. One thing that we find concerning is the amount of tax advice that seems to be given out as one size fits all, but certainly is not. So really today we're going to be talking about, is tax advice one size fits all, as well as some of the things that you should be aware of and keep your eye out so that you can avoid some of these costly decisions that we have seen come across many people's journeys. So with that being said, is tax advice one size fits all? The answer is a most definitely no. Now, why is this even a topic? Why do I even think that we should be talking about it? The main reason is because with the growth in social media, the number of people out there promoting their money management skills, the number of people that talk about finances, it is important to know that taxes often come up. And I think I even saw one of the Shark Tank hosts, one of the investors there, now has a tax firm. He is in no way a CPA, but for some reason, I have my ideas as to why he has seen himself to be someone to have the ability to launch a tax advice company. And as far as reasons why, I think it is in large part because the tax industry is one that is growing in the demand and the need for it, as we see tax changes come up on an almost yearly, I would even argue maybe quarterly, sometimes maybe even monthly basis. Tax law is changing regularly. And so it's important for you as an investor, as a business owner, to have somebody that you can go to. There is a demand for solid tax advice. It is something that has been missed out on for years, and people have paid the cost of that and overpaid in taxes as a result because they haven't had a strong relationship with an accountant. And with that come the threat of people trying to make a quick buck and come into the industry, even though they're probably not qualified. And we see that with some of these firms. And so the reason I am coming out and saying that tax advice is not one size fits all is because we see people trying to hold on the industry that they believe will continue to grow, especially as we see the number of tax professionals decrease, right? Accounting degrees are going down. CPAs are an aging generation. And so there's, with an increase in demand and a decrease in supply, it's only a matter of time before prices start to match that economic trend. And so we will start to see what I'll call more wolves come out on the market in terms of tax advice. And by wolves, I mean people who are going to be preying on the investor, on the business owner, trying to sell these quick fixes, when in reality, tax advice is very much a personal product. Tax planning is a personal product, a personal service, and it is not one size fits all. So as this starts to become more of a relevant topic, here are some things that I think you should be aware of. The first is entity structure. I see an ad saying, you should get this entity structure, and that's about it. They don't go into details about, do you have a certain amount of profit? Do you own real estate? No, it's, you are paying this much in taxes. You could be paying this much if you got an entity structure. And these are ads going off to anybody and everybody. It's costing people big time. It's going to cost them money to invest in whatever service this person is selling. It's also going to cost them big time as they start to realize that they were sold a bag of goods and it wasn't what they needed, right? So we know that entity structure is one of those things, right? It's been promoted. You have to get an S corporation, or even now we're seeing you have to get a C corporation. And it has no basis onto what's going on in your personal life. Where are you as an investor, as a business owner? They're just going to sell you this because it sounds good, and it's going to end up costing you a lot more. But by the time it costs you, they're probably going to be outside of the picture because they're not focused on that relationship. They're instead focused on, again, making that quick buck. So the first thing that you should be aware of when it comes to personal tax advice is entity structure. Do not buy something where somebody just sells you, I'm going to give you this entity structure because this is what we do for everyone, especially in the real estate space. Entity structure is one of the most important things to get right. And you want to make sure that it's done by somebody you trust, somebody who has experience in the real estate space, somebody who knows what they're doing because they have the degrees and the licenses that gives them the ability to practice, right? You want a CPA. If you can get a certified tax planner or a certified tax coach or a certified tax strategist, that's even better. I don't think degrees are everything. I don't think letters at the end of a name are everything, but in taxes, they play a crucial role, right? There was a court case recently where somebody was having their taxes done by their cousin, and the court did not need to spend much time on the case to know that this person was not qualified. They were giving bad advice, and the business owner had to pay quite a bit of money as a result. So one thing that you want to make sure when you're looking for a tax planner is that they have the right credentials, the right knowledge, the right expertise. And you do that by having a certified public accountant, somebody who can practice taxes publicly, somebody who can defend you in front of the IRS. And enrolled agents are an option as well. I'm a CPA. It takes more to get a CPA, but enrolled agents do have the authority to practice before the IRS. There's a certified tax planner designation. It starts off as a certified tax coach. And then once you serve enough clients and do enough tax plans, you graduate up to certified tax planner. That's what I have. And that's what a lot of our employees will continue to have as we expand. This is done through the American Institute of Certified Tax Planners down in San Diego. If you can find somebody who has that designation, that's an even greater amount of confidence that you can have that your advice is sound, it's concrete, and it will serve you well. And there's only a certain number. I think last time I checked, there were about 600 of us all throughout the US. So it's not every accountant has it. It is a very niche, it's a very limited resource, I will say, but it goes a long way in knowing that they're qualified and they've had a certain amount of experience in doing tax planning and these advanced tax strategies. But this started in a discussion around entity structure. That's the first thing that you should be aware of. If somebody's selling you a one-size-fits-all entity structure, run as fast as you can away from them. The second is depreciation. Depreciation is one of these things. And the reason it's personal and not one-size-fits-all is not because I advise some clients to take depreciation and others to not. No, it's because there are certain opportunities out there through the use of depreciation for people that are in specific areas of business. We'll talk about real estate professional status here in a bit, but when you consider the real estate industry and real estate tax advice, you can't go very far without talking about depreciation. And then when you talk about depreciation, you can't go much further without talking about accelerated depreciation, or sometimes it comes through the use of cost segregation. These are buzzwords that a lot of people hear about. We meet with a lot of people that will know about these things, which I think is great. But to think that you should move forward in using accelerated depreciation before getting a clear idea of whether it fits your circumstance, that is not something I would advise. I would advise you to reach out to a qualified tax planner, a qualified tax professional who can dive into the details of your specific profile and decide, okay, we're going to use accelerated depreciation this year. We're going to use cost segregation this year. We're not going to use any of it because it won't benefit you to the level that the sales rep says it will, right? These things require certain standards to be met. And if you don't meet those standards and you go ahead and invest in a certain area, you might not get that full benefit. So you'll be out a couple $1,000s through the investment that you put down to get these accelerated depreciation, these cost segregation studies done. And you will also have to pay a larger tax bill than you expected, which will likely add to your burden, your financial burden, which is nothing to laugh about. So two things that I believe are incredibly personal, but will be sold as a one-size-fits-all opportunity are cost segregation and advanced depreciation, accelerated depreciation, as well as entity structure. Now, just one more thing on cost segregation. We have a lot of friends and great referral partners in the cost segregation industry. And so I don't mean to say that all cost segregation representatives are bad and you shouldn't trust any of them. I have a lot that I do trust and refer a lot of work out to, but the best thing about them is that before selling someone a cost segregation study, they'll say, I don't know if you meet all the requirements necessary. Why don't you talk to my friend Chris about it? And so if you are meeting with a cost segregation expert, especially if you're meeting with them before meeting with a tax professional, ask them, hey, do you have any tax planners that you would recommend who I can speak with about this to see if it would fit my profile? And by doing so, you're gaining trust with that cost seg expert, and then you're also getting some expertise in the tax world as well. And then the last one, as far as tax advice not being one size fits all, is real estate professional status. Now, if you're a real estate investor, you're full-time in the space, or maybe you're getting in the space and have goals of leaving your W-2, you've probably been told about real estate professional, and it's a great opportunity for those that are fit for it. You know, we meet with a lot of people who are like, hey, Chris, I'm a real estate professional. I do real estate and I also have a W-2 job, or I do real estate and I do it 1 hour a week and get passive income through the use of syndications that other people invest in. And they say, yeah, I'm a real estate professional. That does not fly. Real estate professional is one of the most audited topics of the IRS. And so for you to claim real estate professional, or you to believe that you're a real estate professional without the right amount of evidence to back it up, that quickly will be lost in tax court. And it's important for you to understand this before buying anything or believing that you're a real estate professional and then using certain ideas like cost segregation because you believe that you have real estate professional status and therefore you'll get all of the tax benefits, when in reality, you don't qualify for real estate professional because you haven't met the hours requirements, or maybe it's not the activity that you focus the most amount of your efforts on. 2 of those 7 requirements that are necessary in order to qualify as real estate professional. So before you take any sort of tax advice from anyone, especially when it comes to entity status, depreciation, or real estate professional, make sure you meet with a qualified tax advisor, a CPA, a certified tax planner, somebody who has your best interest in mind. They won't just sell you something because it'll make them money. They know the consequences of giving you improper tax advice, and therefore they'll exercise the right precautions before telling you to do something. That's what we do here. You know, we won't give out free advice. If you are looking to be one of our clients, we will expect you to come on as a client before we start advising you on taxes. And that's the point of this podcast also. This helps me make it clear that this does not serve as tax advice to anyone. If you are looking for qualified tax advice, we encourage you to come on as one of our clients, and that's where you'll get the best of the best. And we will over-deliver on our promises to you, knowing full well that by investing in us, you're keeping more money in your account and you're able to grow your portfolio as well and free up some of your time so you don't have to study all these things, right? Because yeah, you might be told about cost segregation and it might cause you to make a decision on investing in a study, or it will cause you to go and spend 20 hours looking up what cost segregation is, when in reality, you could save that money and those hours by just reaching out to a qualified tax advisor. So if that's you, if you're looking for a qualified tax advisor, reach out to us here at BetterBooks. If you got any sort of value out of this conversation, go ahead and subscribe, give us a 5-star rating and review. And if you're feeling really crazy, you can go ahead and share it with a friend as well. I trust you all are enjoying the beginning of your new year. 2024 is going to be a great one, and look forward to catching up with you again soon. God bless and keep crushing it.